And good morning, traders. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, and making money with EAs, as well as, EAs helping you trade better. Those are called expert advisors for MetaTrader 4 and MetaTrader 5, as well as a lot of other things. So we're going to talk about putting money at risk. Also, I want to remind you that if you like this video, then go ahead and hit the thumbs up button. And if you want to see more of these videos, then hit the subscribe button. And we will certainly, and YouTube will let you know when I put out more of these videos, or when we're just messing around around in New England in our free time. Coffee. Let's see. So after that, let's get into the, since we're going to be talking about putting money at risk, let's talk about the risks you need to know about. So this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And the CFTC risk disclosure goes something like this. Forex trading carries a high degree of risk and may not be suitable for all investors. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we are going to be taking a look at today. First, go right over here, and we are looking at, hey, what's this? This is an MQL5. Let's go down to the My Products section. You will see the MetaTrader 4 and MetaTrader 5 EA. My very first one I've got out. It's for Bollinger Bands and RSI mean reversion. It's basically it's tested better for a 4-hour trading window. I haven't tried it on lower trading windows yet, but feel free to. We've got the free demo. You can take out on either one of them and check it out. We've got some people downloading it already. Let's see. I'll be coming up with videos on this, and I'll experiment more with the lower time frames to see if we can make it even more profitable than it is already. Here is tradingforexforprofit.com. This is my platform for traders that I'm building. Still kind of under construction, but feel free to start your own free account, and that way you can put in an account to track your trades and define your strategies and help make you a better trader. And with that is about, because this video is sponsored by me. So that's what's going on with that. Let's see. With that, let's go ahead and get into what is going on this week. We don't know. Well, this is the reason why you should probably close out your trades over the weekend. I've got a couple of trades I've not closed out, but I think they're in this general direction that Iran seems to have broken the ceasefire in the Straits of Hormuz, and it's closed off the Straits of Hormuz again. Iran, what are we going to do with you? But with that, so we could see some reversion back to violence in the Middle East. So we'll see what happens with that. Hopefully not, but I don't know anyone that's in favor of violence, but hey, maybe it'll work out. Let's see. But with Sunday, we've got nothing going on here. Not really a whole lot to talk about at all. I got China releasing some data, but who knows what China's the real data is. They don't really tell the truth anyway. Then we have Monday. We have Canadian CPI coming out. So we've got some Canadian inflation numbers if you trade the UCAD or any other Canadian pairs, the Canadian versus the yen, maybe. The Tuesday, we have core retail sales coming out, and the Fed chair designate Warsh testifies. So I guess it's they're trying to get Jay Powell out of office at the end of his term, which it's probably time. He's been there for 10 years, so it's probably time to get a new Fed chair in. He was a Fed chair during COVID, so that was probably it's time for him to get out. Along with pending home sales on Tuesday also. That's going to be interesting to see what's going to go on with that. I don't think it's going to really move the markets too much, considering he's still a month at least, if he gets approved, about a month at least out of office. So we'll see what happens to that. British CPI data, British inflation data comes out Wednesday. Thursday, it looks like we got a whole bunch of data coming out in Europe. French flash. We've got a whole bunch of flash manufacturing PMI, as well as the Eurozone flash manufacturing PMI comes out. And all the way down into the United States, we've got flash manufacturing PMI. And after that, we have that's also unemployment claims, the typical weekly nothing burger. And then we have Friday with retail sales coming out on the British end of it, and then some Canadian news too. So we've got that coming out too. So with that, let's go ahead and get into our charts and see if we can figure out what is going on here. So this is the U.S. 10-year bond. This is the bond that typically is more connected to the DXY, and it gives us an idea of what's going on with news. Oh yeah, one more thing we need to bring up. The let's forget this one. FedWatch. CME FedWatch. It is the Chicago Mercantile Exchange's FedWatch tool that they use to kind of figure out what's going on here. And we are looking at a 97.9% interest rate cut on the end of April. And that is a 2.1% increase, chance of an increase. I don't see that happening at all. I don't even know why that's in there. If anything, we should be looking at a percentage of a rate cut, not a rate increase. So with that, let's go ahead and get back into our charts. We should, if we see a rate increase, then we'll see the bond. The bond yield's not going up though, so I don't understand why we're even considering a rate increase, because bond yields back in here, this is where we needed a cut. It's way back. Well, during 2002, a big inflation here. That's 2021. A big inflation starting in December of 2021, and it went all the way up to here. It'd be great if rates would go back down to the 10-year, come back down to 1.4%. That'd be fantastic. But we don't see that happening. Instead, we see it up around 4.2%. So that's the difference between pre-COVID, or not necessarily pre-COVID, but during the Biden administration's inflation fest. And I'm not voicing political opinion here. That's fact. It was during 2022, and everyone was saying, "Oh, inflation is the price of freedom and stuff like that." Well, actually, that's not how it works. Inflation enslaves the American people, and any people where you have high inflation. But at any rate, that has money and stuff. Has money because Zimbabwe has like 250% inflation every year and has to change their currency every 6 months or something like that. But that's for some reason doesn't really affect their people into making changes to the people that are making those decisions. Let me see. So enough of the U.S. 10-year. We have the DXY. So the DXY is coming down too, in accordance with everything else. We'll see what happens. We'll see when this opens today, because we've got a big gap. We did have a big gap. I don't know where it went. I guess it got filled. So we're gonna be. I'm actually going to be looking for a big gap. Looking for this to come up to open maybe here. So we're looking for some dollar strength, which is kind of not what I want, because my positions showing dollar weakness are falling. No. Those positions are dollar strength. Okay, so they are dollar strength. I'm selling the Great British Pound and the Euro, and I left it overnight. I mean, over the weekend. It's sometimes bite my fingernails doing that, because you shouldn't. It's not a good idea to leave your trades in overnight or over the weekend. If you're a futures trader, then you don't have any choice but to leave your trades in over the weekend and then see what happens. Then you could have a lot of things happen, like you could have the market actually jump over your trading stops, and that can happen in the spot market too. So we'll see what happens with that. So it'll be interesting to see what happens with the open in Tokyo this morning. This afternoon, this evening, like about 6 o'clock our time, 6 o'clock New York time. Euro versus the Great British Pound finished here. I don't have any really reason to put in any new boundaries or anything on that. Euro versus the dollar. This is one that I like to track heavily. It's still within this range. Getting into the top end of the range, it bounced right off of this mark right here, which is the January 2026 weekly high close. And here this past week we touched it and then pulled back. Let's see if it's going to break through, continue breaking through on that. Great British Pound versus the dollar. Again, look at this range. This range is still very defined from here to here. So we're in a ranging type situation, which we want to consider a mean reversion type strategy. which sometimes works, sometimes doesn't. It's if you got, sometimes it'll trigger mean reversion about here, which I got tested out. I guess it was about here, that where it tested and then came, then did not pass, and then started coming through, and then went up some more, and I got stopped out of that trade. 75 pip stop loss. So, oh well. Pound versus the dollar is right here. It is coming back down. I'm expecting, if we have renewed violence in the Middle East between the United States and Pakistan, the United States and Iran, we should see that coming back down. Should see the dollar strength again, because that's what happens when we blow stuff up. Swissy is doing very well. I mean, not really. It's hanging out. It's tracking the dollar, so it's tracking the DXY. It's down here around 78.20, call it. Not really anything to really write home about here. I want to put some lines on this chart somewhere, but that is a wicked mean reversion. I don't think we can call that range bound at all. This is down, just going down. This mean was range bound through here, between 2023 to 2025, and then broke to the south, and is continuing to break to the south, unless we form another range here. But it's still, we don't have enough data to figure out if that's a range yet, or if that's going to hang out for a while. We've got a top right there at 80, and it is trading at 169. So it's but look how bouncy it is. It's that might be a good time to get a lot of cool things going on. You get a lot of activity, a lot of volatility that we can make money on. But however, it's very hard to see what's going to happen from one day to the next. So it's I don't know that I would try to trade the Swissy. Dollar versus the yen. If you want to trade the Swissy, knock yourself out. But that is not trading advice. That's just my opinions. The dollar versus the yen is right here, and it is at 158.64. Still not breaking to the south very hard, following the DXY. So that's we'll see what happens with that. It is kind of stopping out right there at this green line, which is the, I can't tell what that is. Oh, okay. It's a major technical level. We don't know why it's a major technical level. I just wrote that in there because somebody said it was. And I was probably following the guys at Forex.com, James Stanley and Michael Boutros. Check those guys out. They're smarter than I am. They know what they're doing. I'd highly recommend checking out their videos on Monday morning. We've got Michael Boutros doing the opening bell also every trading day. And James Stanley is one of my favorite statisticians. He is Tuesday around noonish, and again on Thursday or Friday, sometimes on Saturday. So the pound versus the yen. Look at that nice doji right there. It looks like we could see some pullback on the dollar, on the pound versus the yen this week. So keep an eye out for that. Euro versus the yen, same thing. Not looking too looking like it may pull back on that one. If it follows the price, oh, that's the old. Never mind. I'm not there yet. Dollar versus the CAD. If I could figure out how this one trades, I would love to get in on this, because this is a very, very well-defined pattern. But when from 2020, but when hindsight being 2020. But if you look at the dailies or the weekly charts, then it's all over the place, and it's hard to figure out what's going on. My shoulders give me a lot of trouble today. Let's see. Dollar versus CAD versus the yen. Again, not really knocking anything out of the park. Just kind of hanging out there. So 115.85. It has kind of disassociated itself from the oil market, because Canada is a huge oil producer. Japan is a 100% oil importer. So that's a big. So it sometimes follows the oil market. And look at that. That's all over the place. Truly all over the place. So we're going to expect it to go higher, much higher, especially if violence renews in the Middle East. We'll see what happens with that. It closed out at $82 a barrel, which is more like it. It's where we like to see oil. Would like to see it way down here and possibly fill this gap right finally right here. It's at 67.53. I'm not holding my breath on that one. So we'll see what happens. Aussie versus the dollar. Again, oh look at that. It looks like it's kind of topping out right there at 71.68. Some big pullback right there. Almost a price rejection at 72 to 27. That was on the last day of trading. I don't remember seeing 72 on that. No. There it is, 71.68 with a high of right there of 72.18. That's why we did not see the 72 close, because we did not get a close in 72. So again, not really a whole lot to talk about in that regard. Gold's perking up now that the central banks are waking up after the Iran oil and the Iran oil shock and everything else like that, and saying, oh my God, look, we need more gold. So they started buying gold again. Look at that well-defined doji right there. That is just classic. Very nice doji right there. So we're going to see a run up on, or seeing a run up on gold for the last 3 weeks. Bottomed out right there at, wow, can't make that up, 44.92. So basically bottomed out at 4,500. And now it's taken off again. We'll see what happens with that. Should pull back if we have renewed violence in the Middle East. At least that's why I see the pattern working out right now. Why? I don't know. I'm not gonna the whys I try to skip, because I take a look at what the chart's doing and base it on the event. And if because when we have a lot of bombing going on in Iran, dollar DXY goes up, euro pound versus the yen goes down, gold goes down, oil goes up. And then when it stops, it reverses. So that's what I'm looking at. Why? I don't know. That's what the traders do. Because it's like the perception, if you have good news come out, is it good news? Because there is always a flip side that the market is going to interpret it as bad news. And it's really hard to predict sometimes. So I don't trade the news. Palladium, that's again not trading advice, just what I do. Palladium is coming down. We didn't talk about platinum, did we? Platinum, 21.41. Expect a reversal on that. Palladium, if we have renewed violence. If we don't have renewed violence, then the metals will probably still keep going. Silver, right here, 80.77. Henry's throwing in his 2 cents. Henry, the Forex trading parakeet, who is in his cage right now. Silver at almost $81 an ounce. I am very partial to silver. Got a couple of them right there. So highly, I would like to see silver go to $500 an ounce, but I'm the only one that wants to see it go that high. Let's see. After that, we have software. Look at that. Look at that. Very impressive comeback in the software sector. So the IGV is showing a very strong bullish engulfing candle. We'll see if that can maintain that trend. The winners out of that are going to be Salesforce. HubSpot's a loser. That's not, except these aren't weekly numbers. HubSpot is not having a bullish engulfing candle. Salesforce is not having a bullish engulfing candle. Intuit is not. GoDaddy is. Adobe, nope. NVIDIA. Oh, look at NVIDIA perking back up again. Breaking 200. We'll see if it can continue its run with the software bubble continues. And lastly, we have Upwork right here. And I'm a fan of AI to a point. I do use AI for a lot of projects, for some of my projects, but it's not the bio and all. I still think and use my brain too, as much as it works, as much as I can. So Upwork even perked up a little bit and got a bearish engulfing candle out of that too. We'll see if that trend continues. It's not always a guarantee, because we have one right here that, well, took it up a little bit and then collapsed again. So we'll see if that continues. So that is about all I got for today's weekly Forex look ahead. But this is what we do. We on Sunday we kind of see if we can figure out some rhyme or reason why the stock market will go up or down, or what direction it will go up and down. I do want to look at the two that I'm involved in right now real quick before we go. Is the euro versus the dollar, and I want to see what the MACD is doing. MACD is kind of perking up a little bit. Those lines are still not crossing. ATR, a little bit more volume, and RSI is sitting right at about 55. So I'm actually trading against the market right now on those. On the weekly numbers, look at the 4 hours. 4 hour, let's see what happens there. I kind of make this bigger. And we have it coming down, finishing down to around 135. And here, see what happens there. We have it down. So who knows what's going to happen with these. We'll certainly see on if we have any bombing going on today or in the overnight. I think we'll probably sit back. It'd probably be the wisest thing to do, but we could see a pullback, big pullback in the pound and the euro coming this week. Might, maybe not, who knows. But at any rate, that's all I've got for today, for this week, for our weekly Forex look ahead. If you like this video, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel, and YouTube will let you know when I put out more videos. And lastly, if you want to talk to me directly, go to the comment section, and I'll be happy to respond as soon as I see I've got a comment. So with that, you guys have a great one, and happy trading this week. Talk to you later. Bye.